the results themselves, which represent the first quarter until June 30th, was generally in line with most people's expectations. I think what the fear is that since then, the NAV of the company has actually declined by a further 10%. As you mentioned, the NAV at the quarter end was about $239 billion. Currently, it's about 215. And so I think what the market's more worried about is not where we were in the first quarter, it's just more where we're going, especially as you mentioned, the Chinese regulatory crackdown, and just also I think through a certain extent, fear of tech investing globally. Remember, Softbank is kind of it's not just a mobile phone company in Japan. It's really a bellwether investment for a lot of up and coming tech companies throughout the world. Uber, Didi, they have new opportunities in India and so forth. So I think what more people are worried about is just where we go from here, and do you trust the management? Do you trust the market to want to participate in that type of situation?
And Son is always sort of quite quick to say, yes, do trust me, don't be quick to doubt. However, the China investments, you mentioned there, some of them like Full Truck Alliance, Xiangmen Education, some of them dropping 70% since their US listing in the past couple of months. So was it a mistake to plunge into China in that way? Are they right to be cautious heading forward?
Well, it definitely wasn't a mistake. I mean, the stock's done extremely well over the last couple of years, especially on the back of Alibaba. Alibaba currently represents about 39% of the total NAV. So that's still a good investment, although it's really not generating a lot of cash for the company. So I don't think, that's been such a mistake. China is obviously a huge opportunity for technology growth in the future. So I'm not too worried about that. I do think that a lot of the investments do red flag the ESG aspect of the investment in China or globally. You remember they did make an investment. They lost $5 billion in North Star, which now maybe they've learned their lesson. I don't know, but China overall probably is a good investment long term. It's just that there's a lot of regulatory uncertainty as the Chinese government cracks down. Now, about 5% of NAV is also in LATAM. And they have operations in India. Investments in India, they want to invest more in North America, and they want to restrain the amounts of investment in China to only 10% going forward. So, in a way, they're trying to come off as being a very prudent future investor with other opportunities globally. But, at the same time, you're still investing in an area which is still a lot of up and comers where you don't know if you're going to be the winner or not. And that's I think the biggest risk.